Good day. Ira Epstein of Linn Associates with your agriculture update. And this wrap-up, if you will, is for Wednesday, the 15th of April, 2020, normally a tax day, but not this time around, not with COVID-19. And of course, all the dilemma and financial heartache that is bringing to people around the world. I was reading today some interesting stories. They're talking about the poultry industry and the fact that they're having to cull millions upon millions of chickens because the processors for them can't take them in. They don't have the staffing. We've seen that in the pork processing. We've seen it in cattle. And now I'm hearing about it that it's going on in the chicken part of it. You know, what do they do with all that meat? I would think there's a way that you can pass it to the public. I saw yesterday farmers, I think it was in California, just putting out stuff that could be harvested right now and it's in a junk pile. That's not right. There's got to be something that can be done with all this. I just don't know what that something is. When we take a look at the grains today, corn down 5.5, beans down 3. It was interesting because meal market, if you hear this, it's normally bearish to meal. I mean, that's part of the chicken feed, so is the corn. So I was surprised to see that up, but the beans still weighing on the marketplace. You can hear all you want about what OPEC's doing and what the U.S. is doing in oil. The problem that's going on is prices continue to fall, and they continue to fall hard. So there's no place to put this oil. That probably is the biggest factor. And we are hearing that economies are starting to come back on. Germany announced that they're going to reopen schools come the 1st of May. I'm already looking and seeing stores have reopened in some degree in Italy. I'm seeing the fashion boutiques even opening. So, you know, when you get to that level, that's a good thing. But it's a new world. New York's saying if you're going to go out, you got to wear a mask. So that gives you an idea. Chicago, I just heard our mayor, they're not enforcing that particular rule. They're saying you're smart enough to figure that out yourself. And I don't know that that's right or wrong, but I think you've got to control everything to a better degree. The stock market down today, but it's cut in half. Almost the losses that it had. Metal market's up a bit here, as you can see. The dollar a bit higher. Not an awful lot that I'd want to talk about on the dollar one way or the other. In the bean market, you know, what we had been talking about has come true. I had talked that the market looked like it was going to challenge these lows again, and we're right back to them. And now I'm still saying, if you get much under here, you've got to be able to hold this level. If you don't hold this, you're probably coming back at those low levels that you made last April through June. So the year ago levels on a washout could easily be the next attack zone. When we look at the chart action, you can almost see the stepping ladder that the market's making back to the downside. In the swing lines, they're not in a trend. You've had this pattern of this higher high, and then you broke back down. We're getting these variations in the market that move 30 to 50 cents at a time. In a normal trading environment, you don't get that. These are big moves in very brief periods of time. The market's back under the 18-day average, so that puts the bias to the downside. The next target here on the July beans, the lower Bollinger Band at 846.25, and I'll repeat what I often teach here. First challenge of a Bollinger Band are where the pros often, the word is not always, I want to make that ultra clear, but often that's a zone where pros take money off the table, especially when the bands are further apart. You get the bands narrow like this, it holds, but then you could break out to the downside, and the pros, I think, recognize that. This is not quite that pattern. As we come to the slow stochastics, you are oversold. So it wouldn't surprise me to see some short covering down here. You're oversold, approaching the Bollinger Band again. We'll see. If it rallies, you still have plenty of resistance at 871. And if you were to just rally here, you'd have a lower low and then a higher high if you got up and over 877. So there's not a chart formation that I like to work with. In the meal market, this could be a sucker play, this bounce. Why? You're now getting your embedded reading. If we take a look, both numbers are under 20 today. Yesterday, both numbers under 20. The day before, under 20. So you had the 3. In fact, you got more than they have 4. That tells me that on rallies, the pros are going to wait to sell this market short. In fact, they won't wait very long. They'll be selling it. We have 2 levels of resistance that are rather far away, $10, but on $10 in this market's nothing, and that's the 100-day average and the 18-day average of closes. So on rallies, I'd be looking to see if this stays embedded. That's what I think is going to happen. The pros are going to sell into it. In the soy oil market, we have a pattern of a higher high, a lower low. We're not trending. The market broke that trend when 27.41 was taken out. You broke the higher low, higher high pattern. And if you really look at that, not a bad play. The Bollinger Bands did their job of restraining the market. Now the question is there any follow through to the downside, or does the market just want to hang like it did yesterday, right by that 18-day average of closes? Corn, no. Corn's in a bear trend. In fact, if you really look at the market and we step back together, it's been doing this and staying under that 18-day average since February, and it's still doing it, and you're down. And what about getting an embedded reading? Well, both numbers today are under 20 in the slow stochastic. They were under 20 yesterday, under 20 the day before and the day before. So yes, we're still in that pattern of an embedded reading, which means you converted the readings from being oversold to locking in a bear trend. And when that happens, often, again, I'm not going to use the word always, markets continue to get sold on intraday rallies as the market tries to work lower. I will change my opinion of that if the red line closes under back over 20, but actually the red line is accelerating to the downside, which is adding more bearishness. In the wheat market, we went back to the lower Bollinger Band, and you know what I'm going to say. The first challenge, if you hit it, folks, if you hit that band, be careful. That's where I think the pros take money off. It got as low as 535 well, it actually got lower than that intraday, 31.5, 35, and that was the Bollinger Band. You finished at 40. So I think my theories at work there, but I'm not trending. I've got this pattern of a lower low and a higher high. That is not a trend. In the sugar, just drifting prices. That's the only thing I can say with it. And you know, sugar's got a problem. Is gasoline prices are slipping, as oil prices are slipping. What happens with the sugar? Most people don't use sugar the way they used to, so it's ethanol today. That's a real problem. Ethanol's at all-time lows. When you look at the coffee market, coffee's stuck just the way we were talking, just churning in here at the 18-day average. No follow through up, no follow through to the downside. This is a market that should be off your radar scope, not giving you trend opportunities. In the cattle market, an interesting day. We got follow through to the upside. It had what we'll call, I believe, an inside day today. The high today was 85.57.5, and yesterday was 85.65. So just an inside day. We do have a pattern of higher lows and higher highs. If the market lifts, look for resistance at the 18-day average. If it breaks down from here and gets under 80.27, you could end up with a pattern of lower highs, lower lows, saying you want to go back and visit the lower Bollinger Band. Because the bias is down, and I define bias as where's the price in relation to the 18-day average, and when it's under it, it's down. Even though the swing line's up, the bias is down, you got a big nothing here. In the hog market, trend is still down, still an embedded reading, lower highs, lower lows, and again, we're knocking on the door of new lows for the year. So nothing very bullish on that market one way or the other. You know, for those of you that are grain traders, that are watching the softs, the meats, I think you'll find the information we put out second to very few, if any. You know, when it comes to weather and the planting and what's going on. By the way, I woke up this morning, I think I was up at 4:30 looking outside, and we had a blizzard. 60-car pile up in Chicago, in case you're interested. We don't get snow like this typically in April, so it's unusual, and there's nobody on the road, so these cars are going faster than they should. But we cover all this. And I mention that because we have our own meteorologists. We have, in fact, two of them that report through our charting software and through our different reports. And you get this. You get their emails. It tells you what's going on. Where do you think I'm getting this information on the chickens, the broilers? Getting it from our research department. I wouldn't know all that. And then they can tell you the names of the different poultry producers that are having these problems, the growers. And then what do you do is you're taking it to the packing houses, and there's nothing there. There's not enough people to do anything. That is a real problem. But we cover all that. And how do you get this? It's simple. You go to our website, First thing you'll see on the bottom right is our free offers. If you haven't seen what our research is about, this is about as good an opportunity as any I know to do it. You're all home. Why not read it? And we put it out all day long. You can click up here and that'll take you right there as well. In the meantime, I'm Ira Epstein. Thanks for watching, and I'll see you all tomorrow.